All right. Good morning, everyone. Tim Davis coming to you guys with a early morning market review. Today is Monday, December the 18th, 2023. So just about less than 2 weeks left before we approach the end of another year. And we are in that infamous zone that folks call the zone of the Christmas rally. So let's see what the market is showing us. Um, I'm going to start off by taking a look at the SPXA 200R, which is the percentage of S&P 500 companies trading above that 200-day moving average. And I want to point out something here. First and foremost, look at the weekly chart. This tool pretty much tracks the overall momentum or sentiment of the market. And this is something I've been I watch all the time. And I want to point this out that we are trading right around a level of resistance. Okay, so we have to see if if momentum breaks out above this level. Every time we hit this level over the past year, we have seen some type of pullback from market sentiment. And as you can see, we hit that level last week, and like the overall percentages pulled back from the level. As you can see, this long wick here. We pulled back from that level last week. So now this week is going to be a test to see how market responds to this. Now, is this going to be an area of consolidation? Do we trend sideways, where we could start to see some market rotation overall? If we start to see some type of consolidation here, we could see market rotation within the market itself, which means you could see some traders coming out of certain stocks, going into certain stocks. If we start to consolidate, this upward movement it still seems pretty strong, but we definitely run into an area where we can start to see some pullback or some type of consolidation. So that's something we have to pay very close attention to. If we break out above this level, then we can start to really see stocks overall take off in a major way. So that's the sentiment tool. And if we take a glance at the daily chart of this tool, you'll see how much in the overbought territory it is. Here's the daily chart, and as you can see, definitely in overbought territory. Looking at the RSI, RSI is definitely in overbought territory. And we see the rejection right here. Got up around the 80% level, and we started to pull back like we did before in the past. Hovering around the 80% level before we pulled back. So do we pull back here? We had to wait and see. Like we did start a pull back here. 20 per moving average is probably going to act as a level of resistance. So that's the first level of support. First level we have to see if we get a pullback all the way back to the 20 per moving average. Do we get a response and break out above this level? That's something I'll be paying close attention to this week. So this is the overall market sentiment tool. Now, let's take a look at our individual indexes. All right, let's start off by looking at and we'll look at the ETFs again this morning. Let's look at the SPY first, SPY. Okay, what we'll see automatically is that the SPY is still and it's in overbought territory on a daily chart. So we see an overbought territory on a daily chart. Price action above a level of resistance, a previous level of resistance. So former resistance now becomes support. And this 20 per moving average will act as support as well. So does price action bounce off of the 20 per and go higher, or do we break below the 20 per and roll down to test this level of support down here? We have to wait and see. Not sure which way that is going to pan out just yet. If we switch to a weekly chart, okay, you'll see price action is definitely on a weekly chart looking like it really wants to make an attempt to eventually take out this all-time high of around 480. So we could see some type of pullback here. Remember, this level here is going to act as a level of support, and so will the 20 per moving average. So we could start to see again some type of consolidation around this level. Some backing and filling, or a drop. So we got to wait and see. And now we are in the mode of a Christmas rally. We could More than likely, this scenario could be some type of consolidation here before we break out above this level. That's a possibility. So wait and see how that pans out. So that's a look at the weekly and the daily chart of the SPY ETF. Let's take a look at the DIA, which is the ETF for the Dow Jones. And this one is already shown signs of a breakout above all-time high level. Right around that level. This is weekly chart. We actually broke out above that level. So now we could start to see some back and filling. We can start to see some pullback to this level of breakout. Former resistance now becomes support. Look at a daily chart here. Again, you can see we're in overbought territory in the daily. The RSI is definitely in overbought territory. So we can start to see some type of consolidation here. Maybe a pullback to the 20 per moving average and continue to consolidate, or you pull back and drop below the 20 per moving average and come back down towards previous resistance, which is now support. So we have to wait and see how this pans out. Anything is possible. We definitely can see big time overbought territory on our side. So we could see some pullback here and maybe some consolidation before the market decides to continue this Christmas rally. And to see how this pans out as we go through this trading week. We can definitely start to see some type of rotation. If we start to go sideways and pull back, slight pullbacks to the 20 per moving average, we can start to see some type of stock rotation, folks. Certain stocks continue to rally, and certain stocks start to pull back. That is a possibility. Versus a flat out just pull back to this lower level of resistance. I don't think we're going to hit that level, but we have to wait and see. But we're definitely in big time overbought territory in the daily, so we can definitely see some type of pullback or consolidation at this point. Okay, that is a look at the diamonds, DIA. Now let's take a look at the triple Qs, which represents the NASDAQ in a nutshell. Again, overbought territory, looking at the RSI. And the RSI readings hovering around 83, 84, right at a level of resistance. And we see we are hovering right around that 406 level. So we could see again some type of consolidation or pullback to the 20 per moving average. And if that doesn't hold, we can see a pullback to this around 390. But we're in this Christmas rally mode, so we could see just a basic consolidation, maybe a pullback to the 20 per moving average, and then some consolidation. And before we get another leg higher. That's to be seen as we travel through the rest of this week. We'll see how price action is going to pan out. Look at the weekly chart; definitely looks strong. Like we're just starting to get into overbought territory, so we could consolidate here and break out well above this level, which is possibly the more likely scenario. Being so we are close to the end of this year, and around the time frame when folks are looking for this Christmas rally. The breakout point, the ultimate breakout point for the Qs is 4.8. We get about a 4.8 level. We could definitely see much higher prices, but I think right now we could start to see some type of consolidation until the market settles and decide which way it wants to go. Again, the daily chart definitely shows some overbought territory. All right. So we looked at the Qs, we looked at the SPXA. Looked at the SPY, and we looked at the diamonds. Let's take a look at the IWM, which represents small caps. And as you can see, this one gapped up to that level of resistance and pretty much stalled out right there. So right around that $200 level is where price action has reached the level of resistance. Okay, now we have to wait and see what happens here. There's a gap here. So we could definitely consolidate and pull back. Pay attention to this 20 per moving average as they continue to rise up, as we could start to pull back or consolidate here. And if it breaks up below it, we could definitely see some type of hold at the 20 per moving average. That 20 per moving average is going to act as a level of support. So we could see this some type of consolidation like we did here before when we got in this range. We started to see some consolidation. So did we consolidate and pull back, or do we consolidate and march higher? Nobody knows at this point. We have to wait and see, but we're definitely in overbought territory on the daily. Take a look at the weekly chart. It shows room to the upside. So the weekly charts all look like they want to continue this movement up. That gives me, strong belief that we're going to eventually break out of this. That's what I believe. Especially with the small caps still trying to get a strong move up, because you see they've been consolidating in this long range, in this pretty much in this area for quite some time. And it looks like it really wants to break out of there, which is going to help the rest of the market as well. See this area here? This is where we've been running back and forth in the IWM since the beginning of 2022. It's been this back and forth motion. And now it's right at the cups of a major breakout, right at a level of resistance. So we could see some, again, consolidation, maybe some pullback to the 20 per moving average. We'll see if 20 per moving average continue to rise. And if we do get that stop at the 20 per moving average and we don't get a break below it, we could see a breakout after this consolidation mode. All right, so that is a look at the major markets, folks. Hopefully this is something that will help you guys out. And before I go, let's take a look at gold real quick. Here is gold, another one that appears to have run into a level of resistance and pull back, and it's starting to consolidate right around this 20 per moving average on a weekly. So that's what I expect to see with the overall markets, some type of consolidation here before the next big move. Again, here's gold consolidating right around the 20 per moving average on the weekly and the daily chart. Take a look at silver. Same thing, consolidating right at the strong pullback, back up to 20 per moving average on the daily, and look, we're starting to consolidate right around that level. So we could definitely see a bounce from the consolidation level. Look at it, weekly chart, silver. Again, back to the 20 per moving average after this big move up to resistance, pullback. Now we're consolidating right around the 20 per moving average, which leads me to believe that it's building up momentum for a breakout above that level. All right, folks, that's something that needed to point out. Hopefully it's something you guys can use. Oh, one more thing. Let's take a look at crude while we at it. Crude oil. NYMEX crude oil. See if it's in the consolidation pattern as well. And I would say it is. And crude, not only is it pulled back, look at the weekly chart, pull back to this level of resistance. I think crude is setting up for a major breakout. That's just my honest opinion. All this motion down, and all of a sudden, look at these wicks down here. Look at these wicks. This is on the weekly chart. Consolidation. It's like it's consolidating, and we are over. Oh, and the weekly chart shows oversold territory. So any moment now, folks, for the next couple of weeks, we could see crude break out in a major way, and that's what I believe that crude is in store for. That's a look at the weekly chart on crude. Definitely like we've been consolidating for the past couple of weeks. Right after hitting oversold territory, looks like it's preparing for a bounce out of this level on the weekly chart. Let's take a look at the daily. Is the daily chart? Yes. I would say crude is setting up for a breakout, folks. That's just my honest opinion. Look at this consolidation. This is what I mean by consolidation. When you see a long-term, we've been in downtrend for quite a bit, and look what crude is starting to do on the daily and on the weekly. Both charts starting to show this consolidation area. I think we're going to break out of this consolidation and start to head higher in crude. So pay close attention to crude. Pay close attention to the overall market source. I think we at a stalemate, pretty much at a stalemate. But I think crude definitely looks good. Gold and silver looks good. Overall markets, I think this Christmas rally may continue, and then after we consolidate here, we have to wait to see if we consolidate and go higher. We are in dangerous territory with approaching all-time highs, meaning that we can break out above all-time highs, and then we're in no man's land. So we could definitely see a rejection around above all-time highs somewhere to some type of pullback. So we have to wait and see how the rest of this year goes and how we begin next year. Normally, the first week or two in January could also be bullish, and then if we at all-time highs or above it, I do suspect that we can start to see some backfilling and maybe a reversal in overall bullishness. All right, folks. Hopefully, this is something you guys can use. Until next time, Tim Davis here signing off. Enjoy the rest of your day.